Bitcoin, our price target, our bull case price target, and I say I'm focusing on bull case now because of the approval of the ETFs, which essentially has given a green light to fiduciaries, institutions, to gain exposure or not to this new asset class. They have to consider it now. They have to consider it. And so we think that the bull case is closer to the mark. Our bull case in print, we're at $1.5 million per Bitcoin. And our bear case, so we are a little higher than Tim's, I would say. Not competitive at all, though. No, I'm kidding. Our base case had been, before the approval, somewhere in the $650,000 range.
Last year, Ark Invest released their bullish projection for Bitcoin, forecasting its price could reach $1.5 million per coin by 2027. This outlook was bolstered by the SEC's approval of a spot Bitcoin ETF earlier this year, making it Ark Invest and Cathie Wood's base case for Bitcoin. They consider this the most probable scenario. In a recent interview, Cathie Wood discussed Bitcoin's advantages over gold, noting its lower inflation rate following its latest halving. She also shared her insights on the potential approval of an Ethereum ETF, exploring the regulatory environment and the chances of its acceptance. Additionally, Wood outlined her perspective on the future of disruptive innovation, suggesting that Bitcoin and other transformative technologies will continue to influence the future of finance and technology. Stay tuned until the end of the video, where Cathie Wood explains why, despite their significant prediction, Bitcoin holders should always be prepared for potential sharp price corrections.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
We think there's been some anticipation as all of our ETFs have launched here in the United States. There's been a lot of education and this idea, get in before the halving, because usually means good things for Bitcoin. Some of that has already taken place, but we do believe that the increasing participation of institutions, and they've barely begun here, is going to take the Bitcoin price up, especially now with this halving. For the first time, we're going from roughly 1.9% increase in Bitcoin supply growth per year to 0.9. And so for the first time, dropping below 1%, which is the long-term average growth rate of the gold supply. And many people call this digital gold. Okay, now we're truly competitive and actually more competitive, because if the gold price had gone up the way the Bitcoin price has gone up, you bet miners would be out there figuring out where else they can find new supply. Whereas that is not possible with Bitcoin. It is mathematically metered to go up when the halving occurs, 0.9% per year. So I think in that way, it's even better than gold. So we do think it has miles to go. And just to give some perspective to your viewers, we gained exposure to Bitcoin in 2015 when it was in the $200 to $250 range. Today, it is $62,000. I can save our price target till the end. I know you want a futures looking end, but stay tuned. We'll give that. Well, our confidence that it is going to come through. We're one of the first two in line in May, and our confidence is going down that it will be approved, and that maybe any will be approved this year. A big issue for the SEC is staking. That's an important part of the Ethereum ecosystem. And so I think the SEC wants to do a lot more work on it. So are we excited about Ethereum? Absolutely. Especially with all the layer 2 solutions being built on top of it. Are we optimistic that an ETF will see the light of day this year? Our optimism, shall I say, is dimming. What I usually say when people ask me, it's usually in reference to our investment strategy. I usually say, innovation is a bipartisan issue. Few people are against innovation until it's about to hit the traditional world order. in which they are a part or in which they live. There is one exception this year, interestingly, and it involves young people and it involves Bitcoin and crypto generally, or digital assets generally. It's surprising to me, but the Democrats have been reticent and Republicans have been much more amenable to legislation going through Congress. So there are some young voters that are changing their party affiliation from Democrat to Republican. Again, big surprise to me. I don't know if that's going to gather momentum. I think when Joe Biden learns more about it, or his team learns more about it, they probably will calm the rhetoric down a bit. So who knows? When, just to fast forward on that, come to Bitcoin, that's a global monetary system. I understood that better than the people who were making the technology happen. And so my yearning for a rules-based global monetary system started way back then. That's why we got in so early. I said, with Art Laffer, who is a friend of the firm and an advisor, I said, this is such a big idea. This is a big idea. He said, yes. How big could it be? Well, how big is the US monetary base? And back then it was 4.5 trillion. Today it's 7.5 trillion. But back then, Bitcoin was worth 6 billion in total. So very big idea. These things take a long time to evolve. Bitcoin has happened faster than most. At the peak in February of 21, investors thought we could do nothing wrong. I mean, anything we said, the media seized upon it and ran with it. And I was saying to my team back then, this is not good. This will not end well. So I want you to be prepared for a bear market. And I was even saying to our investors, keep some powder dry. And of course, they didn't listen. You know, there was a big pile in as I was buy the dip, buy the dip. At the peak, Michael Burry, do you know who he is? So he, right around the peak, as we're starting down. Now remember, I'm already saying, okay, we're going to have a correction. He said, okay, this is a replay of NASDAQ 1999 to 2003. And that ended very badly. I think the market, peak to trough, the market was down somewhere in the 75% range. And he said, he overlaid our chart against that chart. And remember, I've just spent a time telling you that this time is nothing like that last time. So because the technologies are ready now and the costs have dropped low enough, which was not true back then. And he overlaid our fund on top of the NASDAQ and said, that's where it's going. We would say post now in this new X age. But back then I tweeted, you made, Michael Burry, you made a fantastic call around the subprime mortgage crisis. But you do not understand innovation. You know, we're ready for prime time or something like that. And I wish I hadn't written that, and I'll never do that again. Because what has happened in the interim is algorithms, AI, this is a crude form of AI, are whipping the market back and forth. And from our strategy's point of view, we were a sitting duck, the easiest mark for an algorithm and the quant researchers behind them to say, okay, which kind of strategy is going to be hurt the hardest by rising rates? We have a very long duration strategy. Our investment time horizon is 5 to 10 years, but 5 years is what we're modeling. And if even at the peak back then, we thought we still would be able to deliver our minimum hurdle rate of return for the portfolio, the flagship, 15%. But we knew we were going to have a correction just because the psychology was all wrong. And instead, we went down more than the NASDAQ did, which makes no sense whatsoever. But with algorithms, and we also saw this microcosm in COVID, 1 month as we were all figuring out, oh no, this is a disaster. Is the world going to shut down? The markets, depending upon what metric you use, were down 25 to 30% in 1 month. Our flagship was down 46%. But back then, and I knew it was algorithms and only algorithms, much like it is, I think, today again. But back then I was saying, okay, fine. They had taken many of the names in our multi-omics strategy down by 80%, 90%. It was crazy. They were looking at only two variables, cash and cash burn. And I said, wait a minute, who do you think is going to solve this problem? Who's going to sequence the virus, the coronavirus? Who's going to use synthetic biology to create tests? Who's going to create a vaccine? Who do you think is going to solve that problem? Is our companies. Why are you selling them? And of course, they were the top. The flagship strategy went up 360% in 10, 11 months. The genomic strategy went up, I think, almost 500%. Nice big run up. We're seesawing now. Algorithms saying interest rates up, interest rates down, interest rates up, interest rates down. And so goes our portfolios. This will pass. I have been in many markets where interest rates go up. And before I do that, what I will give you is the prediction for all of disruptive innovation. Disruptive innovation today is valued in the public and private markets at somewhere in the 15 to $20 trillion range. So I would say now, given what's happened recently, it's probably closer to 15 trillion. So a little over 10% of the global equity market cap. We think that is going to 220 trillion by 2030. For the reasons I suggested, growth is good, economic growth itself, thanks to productivity, AI, a huge part of it, but the fastest growing of all of the platforms, because it's at the lowest base right now, is robotics. It's 80% over the next five to 8 years. Whereas AI related is probably closer to 40%. Still beautiful growth rates. And the others are in between those. So wanted to set that out.
So that's Cathie Wood sharing her insights on Bitcoin, Ethereum ETFs, and market volatility. She emphasizes Bitcoin's superiority over gold and its potential to revolutionize finance. Wood's analysis sheds light on the evolving cryptocurrency landscape and its impact on traditional markets. Her perspectives provide valuable insights into the increasing acceptance of digital assets. Overall, Wood highlights the transformative potential of disruptive technologies, underlining their significant role in shaping the future of finance and innovation. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.